here with his view of the U.S. and global economy is John Mauldin, president of Millennium Wave Investments. You probably know John from his weekly investment newsletter, Thoughts from the Front Line. His latest book is Endgame, The End of the Debt Supercycle and How It Changes Everything. John, it's great to have you here this morning.
Well, it's early for me, so
I realize
we'll see if I can be cogent. I've had a little coffee.
You spend more time in another time zone.
Yeah.
But let's pick up on what Mike McKee was just talking about, what the ADP jobs report may tell us this morning. I'm not going to ask you to forecast, but let's look ahead to the second half. It's an issue that you've been looking at in your newsletter.
Right.
Give us the domestic view, give us the global view. Are the bears right? Are we headed into a double-dip recession?
My biggest concern, the thing that keeps me up at night, is Europe. We watched Italian rates go to 6.1%. They're just every day relentlessly climbing up. And what are the Italians telling us? Our economy's solid. That's what they told us 10 minutes before Mexico collapsed, before Russia collapsed. I mean, you know, it's always solid. No, their interest rates, they've got to roll over like $600 billion in the next 3 years. And their interest rates are going to go from 2.5 to 6. They're already paying more in terms of the growth of the interest rate expenses than the growth of their economy. That's called Ponzi. Okay.
So, John, hang on. I want to stop you there because I want to bring it back home to what we see here. Is that to say that what's unfolding in Europe may be more consequential for the future of the U.S. economy than the stagnating job growth and the lack of consumer spending here?
The problem is we are already slow. I mean, we saw the GDP reports. We're growing at 1%. Your own Rich Yamarone, who I had dinner with last night, points out that when year-over-year growth goes below 2%, we've never had a situation where you don't have a recession. And all we need is just a little punch. And I think that big punch is going to be Europe, as Europe unravels over the next 2-3 months, 2-3 quarters. I don't know. I mean, every time the Europeans spend another 100 billion euros to help some country to kick the can down the road, we should stand up and applaud. We should thank them because it keeps a disaster from happening. Just like subprime went from California to Europe, they're going to pay us back in spades when their sovereign wealth, and it's the biggest bubble in the history of the world, is sovereign debt, is going to be imploding, and it's coming to a shore near us. Okay,
so from an investor's point of view, if people share your skeptical perspective, where do you scurry and hide? Do you scurry into gold? Do you scurry into silver? Do you scurry into the Swiss franc?
Well, gold at 1670 this morning. I'm looking, my God. I mean, you know, I buy a little gold every month, but I buy gold because I don't trust the guys. It's not an investment. I take physical delivery of it. But I think cash sometimes can be a position. Income can be a position. Places that will pay me money for the use of my money. I don't want to be in index funds. I don't want to be in the S&P 500. The reality is, in a recession, stocks on average drop about 40%. There's going to be a great buying opportunity coming on the other side of this. And so don't reduce your overall assets by 40% and then try to get out and then try to buy back in.
John, you were telling us last hour that stocks typically drop 40% in a recession. Barton Biggs, while saying now is the time to buy aggressively, also said he's moderately concerned about a double dip.
Well, you know, as I talked last hour, I'm worried about what happens when Europe implodes, and that we are also all interconnected. It will affect us. In late 2006, I was on another network, and in fact, Nouriel Roubini and I were together, and we were being given hell because we said, guys, there's going to be a recession, the market's going to go down. And the market promptly went up another 20% over the next 6 months. The recession came, and on average, stock markets drop about 40%. Now, this one went down 50 the last time, but it's not a good time to be loading up. Now, if you're a trader, and Barton Biggs,
you can trade in and out.
You can trade in and out, and Barton Biggs is nothing if not a great trader. Okay, so he's talking his book. It's time to buy.
But the longer-term holders want to know whether you're as certain now as you were in 2006 that we're on the cusp of a recession.
The data is telling us that we are going to see a recession. our growth rate is down around 1%. Any problem out of Europe will
Is enough to tip us over.
Was enough to tip us over.
Now, what about here? What about problems here? Is another 5 to 10% decline in home prices enough to tip the economy into recession?
No. I mean, that's just another 5 to 10% home price decline. We've already seen 30%. I mean, quite frankly, the lower home prices go, the cheaper homes get, the more people will buy. I mean, I still think that we should change our immigration policy. Anybody that comes into the United States will buy a house for cash. We give them a green card.
How long till we know? How long till we know, do you think? You heard Marty Feldstein,
yeah,
right? You know, the Graham and
guru,
of the economics profession are starting to win and say the economy looks dismal. Maybe we're on the verge of a double dip. How long till we know for sure?
Well, they always tell us after we're already in it.
So is that to say that because they're beginning to say it now, we're there?
We could be. I mean, it's the data keeps. Every time we get another data point, the beige book came in. It was just ugly. I mean, there was no way to spin it other than the word ugly. It's rolling over. I mean, we're going to look at the GDP numbers Friday. Not GDP, the unemployment numbers. I'll be out with Mike McKee out in Maine, and we'll be talking about the unemployment numbers, and that will tell us a lot.
Are we going to see another month of 18,000 jobs? John, great to have you here in the Inside Track. Looking forward to having you back again. John Mauldin of Millennium Wave, author of Thoughts from the Frontline newsletter you've probably seen and read. He says now is not the time to start loading up on stocks. We could already be in a double-dip recession.